Hello, my dear students. Hope you guys are all doing good. Hope you guys are all perfectly fine. So, as you all are aware, as we are doing essay series, in this session, we will try to understand in a detailed manner the provisions of essay 510. So, in this session, I'm going to teach you in a detailed manner. I'm going to give you a complete conceptual clarity relating to essay 510. So, without any delay further, let us jump into the concepts of essay 510. So as you could see here, what is the title of essay 510? So essay 510, the title, if you read it, it is going to talk about initial audit engagements and opening balances. So this standard is going to talk about what will be auditors' responsibilities relating to initial audit engagements and opening balances. If I put it in other way around, this standard specifically talks about what are the responsibilities of auditor relating to opening balances while conducting initial audit engagements. If I properly structure it, if I try to end it in one line, what is the objective of this standard? What does this standard talk about? What this standard is trying to tell us? If I have to summarize all that into one single line, I will say that this standard will talk about what are auditors' responsibilities in relation to opening balances while conducting initial audit engagements. So this sentence might sound complex. This sentence will not make any sense unless I explain the definition of the two terms which are used in this definition, which are used in this title. So this title has two definitions. This title has two terms: initial audit engagements and opening balances. So once we become familiar, once we understand in a clear manner what is the meaning of initial audit engagement, what is the meaning of opening balances, then everything will start making sense. So first, let us try to address that issue only. We will try to understand now what exactly is the meaning of initial audit engagements. Shall we do it, guys? Let us try to do it now. Okay. So what are the two terms which are getting used in the title here? Number one, initial audit engagements. Number two, opening balances. First, we will try to focus on what do you mean by initial audit engagement. Once we are done with that discussion, then we will come to what is opening balances and we'll understand about it later. So first, my prime focus is going to be about initial audit engagement. See, when I say initial audit engagement, this is not something which we see it first in the standards chapter. This term initial audit engagement you might have already come across when you read the chapter nature, objective and scope of audit, the first and foremost chapter as a part of our study material. If you would have already read that nature, objective and scope of audit, you might have already come across this term initial audit engagement. So to explain this, I will take you back to the discussion whatever we had in the nature, objective and scope of audit. See, on the basis of auditor getting appointed, audits can be divided into two categories. One is initial audit engagement and the other one is recurring audit. On the basis of the person who is getting appointed as an auditor, audits can be broadly divided into two categories: initial audit engagements and recurring audits. First, I will explain what is recurring audit. Recurring audit means if the last year auditor is also appointed as current year auditor, that assignment we call it as recurring audit. That's it. In simple terms, in layman terms, if I have to put it, if the last year auditor, whoever auditor has conducted the last year's audit, if the same person is also appointed as current year's auditor, we call that assignment as recurring audit. The name itself says recurring. So take for example 2020-21 for the company ABC Limited, a firm XYZ and Co. They have conducted the audit for this company. Once again, for the financial year 2021-22, the same company ABC Limited, they have appointed once again the same audit firm for conducting the audit. So here, the last year auditor has also been appointed as current year auditor. Now in the current year, for the year 21-22, this audit assignment becomes recurring audit assignment. Why? Because the same person is getting appointed again. So then what about initial audit engagement? If I put it in simple terms once again, if the last year auditor, current year auditor, both are different persons, that assignment we call it as initial audit engagement. Simple. If I keep it in simple terms, initial audit engagement means what, sir? If the last year and the current year auditors are different person, last year auditor is different, current year someone else is doing audit. So such a kind of audit assignment, we are going to call it as initial audit engagement. This is what simple terms. Now, if I teach you the definition, in the standard, they have defined the term initial audit engagement. What they have told us, initial audit engagement refers to such engagement where prior years were unaudited. Last year was unaudited, current year you are appointed as auditor. Then the current year it becomes initial audit engagement. Why? Because last year audit didn't happen. In the current year, you are getting appointed as an auditor. So those audit assignments in which prior years were either unaudited or prior years were audited by predecessor auditor, by some another auditor. Either the last year's financial statements were unaudited or last year's financial statements were audited but by some predecessor auditor. You are not the person who have done the last year's audit, someone else has done the prior year's audit. So then in the current year it becomes initial audit engagement. This is what they try to define it. Come on guys, repeat along with me. What is the definition of initial audit engagement? How the standard has defined it? Either the prior year's financial statements were unaudited or the prior year's financial statements were audited but by some predecessor auditor. Sir, what do you mean by predecessor auditor? Some different auditor has done the audit of the previous year and in the current year I replaced him. Current year some another auditor replaced him. Let me give you one example. Assume that financial year 2021-22, company ABC Limited. In the last year, they have appointed Mr. P, an individual practicing chartered accountant, as a company auditor. In the current year 22-23, the same company ABC Limited, they have appointed another individual practicing chartered accountant, Mr. Q, as a company auditor. Now, for the year 22-23, does it become initial audit engagement or recurring audit? For this year 22-23, this becomes initial audit engagement. Why? Because last year audit was conducted by some predecessor auditor. In the current year, he has been replaced. Simple terms, last year auditor, current year auditor, both are two different persons. This year it becomes initial audit engagement. Let me ask you one more scenario. You are supposed to tell me whether that audit assignment will come under initial audit engagement or it will come under recurring audit. Will you tell me, guys? Right. So I will give you a scenario. You are supposed to give me back a reply. 21-22 financial year, there is a company XYZ Limited. They have appointed an audit firm ABC and Co as an auditor. An audit firm ABC and Co has been appointed as an auditor. And as we know, when a firm has been appointed, not all the partners will sign the audit report. One partner will sign on behalf of the entire firm and we call that person as engagement partner. So financial year 21-22, XYZ Limited, they have appointed an auditor ABC and Co. A firm has been appointed. On behalf of this firm, Mr. A acted as an engagement partner. What do you mean by engagement partner? Even though this firm has been appointed, not all the partners will sign the audit report. Only one partner will sign the audit report. Issue for the year 21-22, Mr. A is the partner who signed the audit report of the year 21-22. Now, Mr. A will be engagement partner for the year 21-22. Now, next year has come, 22-23 has come. The same company XYZ Limited, they have appointed the same audit firm ABC and Co as a auditor, but in this year, in the year 22-23, Mr. B is acting as an engagement partner. In the previous year, Mr. A acted as an engagement partner on behalf of the firm ABC and Co. In the current year, the same firm is appointed, but now Mr. B is acting as an engagement partner. Now you tell me, in this year, for the year 22-23, does this audit become initial audit engagement or does it fall under recurring audit? It falls under not initial audit engagement, it falls under recurring audit only. See, when I say initial audit engagement, altogether audit firm should change. Here, last year, when I say auditor, I will not say Mr. A is an auditor. I will say ABC and Co is an auditor. Mr. A signed on behalf of entire firm. Mr. A is just an engagement partner. In the current year, 2022-23, the auditor is once again ABC and Co only. Just engagement partner, if is changing, that we can't call it as initial audit engagement. In order to call it as initial audit engagement, altogether audit firm should change. Able to understand, everybody? So in this scenario, this will not come under initial audit engagement. Why? Because the last year and the current year, the auditor remains the same. ABC and Co, the same firm is appointed as auditor in the last year and current year also. Just because there is a change in the engagement partner, we can't call it as a initial audit engagement. This becomes a recurring audit only. Clear? So I have explained in a detailed manner what is initial audit engagement. One term which has been used in the title of the standard, we are done with. Now let us come to the other part of the title, which is opening balances. I hope we all know what is the meaning of opening balances. Tell me, if I ask you, how will you define the term opening balances? You will say, sir, these are the balances which are there at the beginning of the period. Without passing any single transaction for the current year, whatever balances are there at the beginning of the financial year, those balances we call them as opening balances. Very good. Some students will become smart and they will go a step behind and say, sir, current year's opening balances are nothing but last year's closing balances. Very good. I agree with that also. Even I do agree with you. Even they have also defined in the same way. So when I say opening balances means nothing but those balances which are existing at the beginning of the year. These are nothing but these opening balances are derived from last year's closing balances. And this opening balances generally represent two things. When I say opening balances, what things they try to convey? Opening balances try to convey two information. Opening balances will represent two information. Opening balances are nothing but opening balances show the effect of all transactions which have taken place during the previous year. Opening balances reflect two kinds of information. Number one, they reflect the effect of transactions which have taken place during the year. At the same time, opening balances also reflect accounting policies followed in the previous year. Opening balances also reflect what? Accounting policies followed in the previous year. So when I say opening balances represent two kinds of information. They reflect two kinds of information. Number one, they show the effect of the transactions which have taken place in the previous year. They also show the accounting policies. They also reflect the accounting policies which have been followed in the previous year. Sir, what are you trying to say? Let me give you an example. Assume that when I opened current year, financial year is 22-23. See the current year's opening balance of fixed assets. Assume that the current year's opening balance of fixed assets is 100 crores. Now this 100 crores of current year's opening balance is nothing but last year's closing balance. So last year's closing balance is 100 crores. Now when I understand in a detailed manner how this 100 crores has been derived, in the previous year opening balance was 120 crores. Last year the total depreciation charged was 20 crores. That is how the closing balance of 100 years was calculated in the 100 crores was calculated in the previous year. The same opening balance has been shown as current year's the same closing balance of the last year has been shown as current year's opening balance. Now what does this 100 crores convey? What information this 100 crores is conveying? This 100 crores is a result of after giving effect of all the transactions which have taken place in the previous year. When you got this 100 crores, what is the effect? How this 100 crores has been derived? This 100 crores has been calculated after giving effect to all the transactions which have taken place in previous year. So previous year, so many transactions might have taken place. After giving effect to all the transactions, this 100 crores of closing balance has been derived. Number two, this 100 crores of closing balance also reflects the accounting policies which are followed in the previous year. If you study this 100 crores of opening balance or closing balance of the previous year, even you will come to know what accounting policy they have followed in the depreciation. Did they follow SLM method of depreciation? Did they follow WDV method of depreciation? Did they follow production units method? So what method of depreciation has been followed? That information also will be reflected in opening balances. So opening balances are a very important information. Opening balances conveys or reflects two kinds of information. Opening balance reflects the effect of all the transactions which have taken place in the previous year. They also reflect the effect of accounting policies followed in the previous year. Understood? So come on guys, define what is the meaning of opening balances. Those balances which are there at the beginning of the period. These are nothing but derived from last year's closing balance. They reflect two kinds of information. One is effect of transactions which have taken place, accounting policies which have been followed in the previous year. Right. So now, since we have understood the definitions of the title, now let us try to understand what does this standard talk about. Assume that you are conducting audit of the year. Let me put it this way. You are conducting audit of the year 2022-23. You are an auditor. You are appointed as auditor of some company for the financial year 2022-23. See, when you are appointed as auditor for the year 2022-23, there is no doubt you will verify all the closing balances. Whatever balances which are existing as on 31st of March 2023, yes, you will verify all this closing balances. Is there any doubt about it? Does anybody disagree with me? No doubt. If I'm getting appointed as auditor of the year 22-23, I will definitely verify all the closing balances existing as on 31st of March 2023. There is also no doubt that most of the people will agree with me. Whatever transactions that have taken place during the financial year, from 1/4/2022 till 31st of March 2023, whatever transactions that have taken place during this duration, that also auditor will verify. That also auditor will verify. Regarding that also auditor will try to obtain audit evidence. So if you are getting appointed as auditor, undoubtedly you will try to verify the evidence regarding closing balances. At the same time, you will also try to obtain evidence regarding all the transactions which have taken place during the year. Now my question is, see, universally everybody will agree that you will try to obtain evidence regarding this both. Now my question is there any requirement to verify even the opening balances which are there on 1/4/2022? As an auditor, when you agreed that you will verify all the closing balances, you will also verify transactions which have taken place during the financial year. Is there any requirement for you to even verify opening balances also? Answer is yes. Yes, you are supposed to obtain evidence even regarding opening balances also. And what SA 510 says is, this is very, very important. Verification of opening balance is very, very important in the case of initial audit engagements. If it is a recurring audit, if last year also you have only done the audit, then even if you don't verify opening balances, that is not a problem there. That is not so much complicated issue. But if it is an initial audit engagement, if last year you are not the person who have done the audit, then definitely 100% there is a responsibility on the auditor to obtain evidence regarding opening balances. Sir, why I need to obtain evidence regarding opening balances, sir? I am getting appointed as auditor for this year. No, I will verify current year's closing balances. I will try to obtain evidence regarding transactions which have taken place during the current year. Why do you expect me to verify even opening balances also? Oh, why do we expect you to verify even opening balances is why? Because no matter how much correctly the current year's transactions are accounted for, if there is a mistake in the opening balance, definitely the closing balance of the current year is also going to get impacted. No matter how correctly they account for current year's transactions, if the entity has made perfect accounting for current year transactions, but in that entity, if there is a problem with the opening balances, if there is some mistake in the opening balances, that will definitely going to have a impact on current year's closing balances. So that's why how much you verify current year balances will be immaterial if you ignore the opening balances. And SA 510 specifically says that if you are doing a initial audit engagement, if last year you are not the person who has done the audit, then compulsorily you need to obtain audit evidence regarding opening balances. You need to compulsorily obtain audit evidence regarding opening balances. You have to check whether opening balances are correctly brought forward from the last year's closing balances, or did they change anything in the opening balances. That information, that evidence you have to obtain. Why? Because if the opening balances contain a misstatement, those are definitely going to have an impact on current year's financial statements. This is what SA 510 says. So as an auditor, you need to obtain audit evidence whether opening balances are correctly brought forward or not, that opening balances are free from material misstatement. Why? Because if opening balances contain a misstatement, they are going to have a significant effect on current year's financial statements also. And obtaining audit evidence regarding opening balances is very, very important, especially in the case of initial audit engagement. See, that's why generally what will happen is, whenever you go for audit, whenever you start doing the articleship tomorrow, once you are done with the CA inter, when you start doing articleship, so when you go for audit, your partner will ask you to do one important activity at the client's premises. He will ask you to do opening balances verification. You will try to observe when you start doing the audit. No, when you start doing the articleship, when you practically start experiencing the audit, your partner will always, whenever you are assigned to any audit, one important activity which he will ask you to do is, first he will ask you to go and verify opening balances. Sir, how we will verify opening balances? Nothing but what he will ask you to do is get the last year audited financial statements. Last year's balance sheet will be there, no? Get the last year's audited financial statements. Then from the software, you will be able to download something called opening trial balance. From the accounting software of the client, you can download opening trial balance. Nothing but before passing any entry, what are the opening balances, that you can download it from the client's accounting software. And you will ask the client to give a copy of last year's audited financial statements. Now you will take the balance sheet, you will take the opening trial balances, you will try to match both. You will try to match both, whatever balances which are there in the last year's financial statements, whether opening balances in the current year's trial balance, opening trial balance are also matching or not, that you have to do it. So there basically what you are trying to do is, you are trying to obtain audit evidence that whether opening balances are correctly brought forward or they are containing any material misstatement. And this is not that easy. It is not so simple task that just you will get the copy of last year's financial statements, you will download the opening trial balance. So this task I can complete in 10 minutes. No, you will not be able to complete in 10 minutes. It will take a significant amount of time. Why, sir? Just for matching the balances also will it take so much amount of time? Yes. Yes. Matching the balances also will take a significant amount of time. Why, sir? Why? Because if you take the last year's balance sheet, assume that you will find trade receivables 100 crores that is there in the balance sheet. Now, if you open trial balance, you will not be able to find an account called trade receivables, but instead you will be able to find individual debtors account. Mr. A, Mr. B, Mr. C, like that, so many debtors will be there. Out of all that accounts, you need to find out which person will fall under debtor. You have to add all the balances of the debtors. Then you will get the total figure. The total figure should match with the trade receivable balance. Will to understand? Now assume that provisions are there. Provisions, some 50 crores are there. Now, when you open the trial balance, there will be n number of provisions. You have to identify all that provisions, add the balance of all that provisions accounts, then that total should match with 50 crore rupees. Same thing will happen for creditors, same thing will happen for fixed assets. So like this, you have to do the totaling and match with the last year's audited financial statements. So this task is going to take significant amount of time, and your partner will make sure that definitely you verify opening balances before you actually start doing audit procedures on current year's transactions. Clear, everybody? Now, okay. So when I say opening balances, once you have performed all the audit procedures regarding opening balances, sir, what audit procedures we will perform? That we'll try to read it in the standard. So first, when we are conducting initial audit engagement, we try to perform audit procedures, and by performing audit procedures, we try to obtain sufficient and appropriate audit evidence regarding opening balances. After you have performed audit procedures on the opening balances, you might be left with two observations. When you have performed audit procedures to know whether opening balances contain a misstatement or not, you will be left with two outcomes. So you have performed audit procedures on the opening balances, and those procedures indicate that opening balances do not contain any material misstatement, or there could be three outcomes which could be possible. So let me put it this way. After you have performed audit procedures regarding opening balances, there will be two outcomes. Number one, you found that opening balances are all perfectly fine. There is no material misstatement. All the opening balances are correctly brought forward in the current year. Will there be any effect on your opinion? No, there will not be any effect on our opinion. So which opinion we will give? We will generally give unmodified opinion. So you performed audit procedures. If you are unable to find any material misstatement, that means you obtained sufficient and appropriate audit evidence that opening balances are correctly brought forward. There is no misstatement there. Which opinion we will give? Unmodified opinion we will give. Second scenario which could be possible is you obtained sufficient and appropriate audit evidence, and on the basis of that audit evidence, you concluded that opening balances contain a material misstatement. You have performed audit procedures and you obtain sufficient and appropriate audit evidence, and that evidence is clearly telling you that opening balances contain a material misstatement. Now which opinion you will give? Here we will give modified opinion. Which kind of modification you will give? In modified also we have three categories, no? Qualified, adverse, disclaimer. Which modified you will give? The standard says in this case you have to give either a qualified opinion or a adverse opinion. Sir, why qualified and adverse? Why? Because we have evidence. We have evidence. So when we have evidence, then we will determine what is the effect of the misstatement. If the effect of the misstatement is only material but not pervasive, we have obtained audit evidence, we came to know opening balances contain a misstatement, the effect of the misstatement is material but not pervasive, then we will give which opinion? Qualified opinion. However, we obtained audit evidence, we came to know opening balances contain a misstatement, the effect of the misstatement is not just material, it is pervasive also. The effect of the misstatement which is there in the opening balances is not just material, it is pervasive also. Then what we will do? Then we will give adverse opinion, completely negative opinion we are going to give. Understood? So this is what will happen in case if you have obtained sufficient and appropriate audit evidence, and on that basis you have concluded that opening balances contain a misstatement, then you will give modified opinion. Which kind of modified? Either qualified or adverse opinion. Now last scenario which could be possible is you are unable to obtain sufficient and appropriate audit evidence to determine whether opening balances contain a misstatement or not. Whether opening balances contain a misstatement or whether opening balances do not contain any material misstatement, that you are unable to check only. You are unable to perform audit procedures. You are unable to obtain sufficient and appropriate audit evidence to determine whether really opening balances contain a misstatement or they don't contain a misstatement. You are unable to perform audit procedures and obtain audit evidence. In that case, what you will do? See, it is a case of non-availability of audit evidence. So in this case also, we are required to give modified. Which kind of modified opinion? We are required to give here either qualified or disclaimer. Why qualified or disclaimer? Why? Because it is a case of unavailability of audit evidence. So you are unable to obtain audit evidence regarding an item of opening balance. If you determine that the possible effect is only material but not pervasive, we will give qualified. If the possible effect of undetected misstatement is only material but not pervasive, then we will give qualified. If I am unable to obtain audit evidence and the possible effect of that undetected misstatement is material and also pervasive, then I will give directly disclaimer of opinion. I will say I am unable to express my opinion. Understood? So this is what regarding opening balances. So this is what you are supposed to do regarding opening balances when you are doing initial audit engagement. See, the discussion of the standard is not yet over. The concept of we are almost done with 70% of the concept of the standard. Now we are left with little bit more content from the standard. What is that is, see, when I say opening balances, I told opening balances reflect two kinds of information. What are the two information which opening balances will reflect? Number one, opening balances will show the complete effect of transactions. And one more information which opening balance will show is accounting policies which are followed in the financial year, the previous financial year. So now this standard addresses one more issue. As I have told, opening balances is going to reflect accounting policies which are followed in the previous year. See, there is one fundamental accounting assumption linked with accounting policies. Can you tell me what it is? There is one fundamental accounting assumption which is linked with accounting policies. Can somebody let me know what is that fundamental accounting assumption which is linked with accounting policies? First of all, how many fundamental accounting assumptions are there? If I am not wrong, if my accounting basics are so correct, 3 fundamental accounting assumptions are there. So what are the 3 fundamental accounting assumptions? Going concern, just a minute, going concern, accrual, consistency. Now you tell me, out of these 3 fundamental accounting assumptions, which one is related to accounting policy? Consistency is the fundamental accounting assumption which is related with accounting policy. What does the consistency assumption say? Consistency fundamental accounting assumption says that you should follow uniform accounting policies year after year. You should not change the accounting policies without any valid reason. Like for example, you have followed in the financial year 22-23, you followed SLM method for charging depreciation. Now you tell me, without any valid reason, can the management come and say in the year 23-24 we will calculate WDV method, we'll change to WDV method? Can they say it? Can they say SLM is becoming very boring, every year we have to calculate the same amount, we are very bored of it, we will not follow SLM, we will follow WDV? Can they change it just like this? No, they can't do it. So this is what consistency fundamental accounting assumption says. Year after year you have to follow the uniform accounting policies. You should not change the accounting policies in whatever manner you want. So SA 510 also says one more thing. When you are doing initial audit engagements, you should even try to obtain sufficient and appropriate audit evidence whether accounting policies have been consistently applied year after year. If you are doing initial audit engagement, even you should try to obtain audit evidence whether accounting policies are consistently applied year after year. If at all there is a change in accounting policy, if any accounting policy has been changed, number one, there should be valid reason for change in accounting policy. And that change in accounting policy should be properly disclosed as per accounting standards. Proper disclosure is required to be given. So if I summarize it, what they are trying to say here, what auditors' responsibilities they give regarding consistency of accounting policies is, number one, as an auditor, you try to obtain audit evidence. Without any valid reason, accounting policy should not be changed. Without any valid reason, accounting policy should not be changed. So number one, you should try to obtain audit evidence that accounting policies have been consistently applied year after year. Number two, sometimes there will be a valid reason like change in statute, better fair presentation. So you might have read it in the accounting standards. In some cases, there might be a valid reason for change in accounting policy. If there is a valid reason, then management can change the accounting policy, but proper disclosure is required to be given in the financial statements. Proper explanation, proper adjustments, proper accounting should be appropriately reflected in the financial statements. So as an auditor, I need to obtain audit evidence regarding these two things. When it comes to accounting policies, I should check accounting policies are consistently applied. Without any valid reason, they should not change any accounting policy. If at all there is a valid reason for change in accounting policy, it should be properly disclosed. The change in accounting policy should be properly disclosed as per respective accounting standards. So if I am doing initial audit engagement, since accounting policies are also getting reflected in the opening balances, I should try to obtain audit evidence regarding these things also when I am doing initial audit engagements. Guys, able to understand? Clear and comfortable everybody till here? Right. So now when you have performed audit procedures regarding this consistency of accounting policies, let us try to understand here also what my findings will have an impact on the auditor's opinion. Like the way I have told, after you have performed audit procedures on opening balances, depending on your findings, you will have an impact on the auditor's opinion, no? Similarly, after you have performed audit procedures regarding accounting policies, you try to perform audit procedures that accounting policies are consistently applied. If at all there is a valid reason for change in accounting policy, the change should have been properly disclosed. Now you will try to perform audit procedures to obtain evidence regarding this. Now, after you have performed audit procedures regarding accounting policies, you might be left with two kinds of observations. Number one, either management has consistently applied accounting policies. They did not change any accounting policy. Or if at all they have changed, there is a valid reason for that, and also proper disclosure has been given. Guys, this standard I am trying to present it in a rough manner. While reading, I will show you the complete chart. So we have a full-fledged chart here. This I will explain. Don't worry about it. This also I will share it with you. Don't worry. I'm writing it in a very vague manner. So I know it. I will definitely share this with you. Don't worry. Yeah, this one. So I have summarized the entire standard into simple chart. Don't worry about it. I will tell you. I will show this to you. I will share this with you. Never worry about it. So after you have performed audit procedures regarding accounting policies, two outcomes could be there. Number one, you came to know that all accounting policies are consistently applied. Or there is a change in accounting policy, but there is a valid reason for that change and it is appropriately disclosed. Will you modify your opinion? No, we will not modify our opinion. We will give unmodified opinion only. Why? Because when it is consistently applied or there is a valid reason for change in accounting policy, that's why they have changed it, and that change also they have properly presented and disclosed in the financial statements, then everything is giving true and fair view. Will you modify your opinion? No, you should not modify your opinion. Other scenario which could be possible is without any valid reason, consistency has been violated. There is no valid reason. Even though there is no valid reason, management has changed the accounting policy. They changed SLM to WDV. I asked them, sir, on what basis you have changed? Why you have changed the accounting policy? They are telling, sir, we are bored. Every year we are charging depreciation on SLM. No, we are bored. That's why we have changed our depreciation method to WDV. Is it a valid reason? No. So accounting policies have been changed without any valid reason. Or there is a valid reason for change in accounting policy, but proper disclosure is not given. There is a either without any valid reason they are changing accounting policy, or there is a valid reason for change in accounting policy. That's why they have changed it. But they did not give proper disclosure. They did not properly present that change in the financial statements properly. In the notes to accounts, they did not properly disclose it. In these cases, the standard says you to modify the opinion. Either without any valid reason, accounting policies are violated. Consistency assumption has been violated. Or there is a valid reason. That's why management changed accounting policy. But they did not give proper disclosure. In either of these cases, if this happens, you try to modify the opinion. Which modified opinion we will give? We'll try to give either qualified or adverse. If that misstatement's effect is only material but not pervasive, qualified. If that misstatement's effect is material and also pervasive, then we will give adverse. Clear? In this case, there will be only two scenarios. Now some people will question me, sir, when it comes to opening balances, you have told three scenarios. You have also told auditor is unable to obtain sufficient and appropriate audit evidence regarding opening balances. Then also you told what to do. But here, why you did not say, sir, what if auditor is unable to obtain audit evidence regarding opening accounting policies? Why you did not add here in the chart? Third case, what if auditor is unable to obtain audit evidence regarding accounting policies, sir? You should not. You cannot say as an auditor, being a chartered accountant, being an accounting professional, being an auditing professional, you cannot come and say, hey, I don't know what accounting policy client is following. I'm unable to understand. Can you say it? If you say it, do you deserve to be a chartered accountant? No, boss. You are an accounting professional. You are supposed to be a master of accounts, chartered accountant, master of accountants, master in the subject of accounts. How can you say I'm unable to understand the client's accounting policy? It will be a shame on us, no? So that's why there should not be third scenario. Either you will obtain audit evidence that all accounting policies are consistently followed or change has been appropriately disclosed. Or you will obtain audit evidence that either consistency is violated or there is no proper disclosure of change in accounting policies. Here there should not be a scenario where you will come and say, sir, I'm unable to obtain audit evidence regarding accounting policies. That should not happen. Why? Because you are an accounting professional. You are accounting professional. You should understand the accounting policies. You can't come and say, sir, I'm unable to understand accounting policy. I'm unable to obtain audit evidence. If you say it, you don't deserve to be a chartered accountant. So that's why when it comes to findings in the accounting policies, these two scenarios will be possible. That's all. Standards explanation is over. The concept in the standard is over. What I have explained, see, this standard is very small standard, very simple standard. So what of initial audit engagements, opening balances. Then I have explained that as an auditor, what is your responsibility in the case of initial audit engagements. Then you will perform audit procedures regarding opening balances. On the basis of that audit procedures, you will have findings. How that findings will have an impact on the auditor's opinion that I have told. And next I have explained opening balances also reflect accounting policies. Regarding accounting policies also auditor will have some responsibilities. What are that responsibilities regarding accounting policies? That also I have explained. And after you have performed audit procedures on accounting policies, you will be left with two observations. What will be the impact of that two observations on the auditor's opinion? That also I have explained. That's all. This is the only concept in the standard. Now we have to start reading the content from the material and finish off the standard. That's all, guys. The standard is over. So let us have a quick look. Is the material? Yes, here it is. So let us read and finish off the standard now. Let us do it. So if we start reading the content from the material, so first we will read definitions here. So what is the definition of initial audit engagement? Let us see how do they define this term. An engagement in which the financial statements for the prior period were unaudited or not audited, or the financial statements for the prior period were audited but by a predecessor auditor. So when do we call an audit engagement as initial audit engagement? Those audit engagements in which either the prior years were unaudited or the last years were audited but not by you but by some predecessor auditor. Sir, what is the meaning of predecessor auditor? As I have told, the auditor from a different audit firm who audited the financial statements of an entity in the prior period and who has been replaced by current auditor. Sir, what do you mean by predecessor auditor? Altogether different audit firm. Like I gave you one example, no? So which example I have given to you? This case. See, if the firm remains the same, just if the engagement partner is changing, then can we call that as initial audit engagement? No. In order to call it as initial audit engagement, altogether entire audit firm should change. Altogether entire audit firm should change. This example. So when I say previous year, the financial statements for the prior year were audited by predecessor auditor. Predecessor auditor means altogether different audit firm. If just the engagement partner is changing, whereas the audit firm remains the same, then we can't call it as initial audit engagement. It will form part of recurring audit only. Next one. So then what is the definition of opening balances? Let us see how this term is defined. Those account balances that exist at the beginning of the period, whatever balances that are there existing at the beginning of the year, that we call it as opening balances. And these opening balances are based on closing balances of the prior period. And as I have told, opening balances reflect two kinds of information. Number one, effect of transactions on events of prior periods, and also they reflect accounting policies applied in the prior period. And opening balances also include, this point is very, very important for true or false and MCQs. Opening balances also include matters which are requiring disclosure that existed at the beginning of the period, such as contingencies and commitments. See, what they try to convey here is, when I say opening balances, most of the people think that opening balances means those items which are there in the balance sheet. Like debtors is a opening balance, creditors is a opening balance, provisions is a opening balance. So when I say opening balances, generally we imagine opening balances are those balances which are there in the balance sheet. But here they are adding one more point. When I say opening balances, they don't include only those items in the balance sheet. Even in the notes to accounts also some opening balances could be there. Like for example, If I give you one simple example, so take here for the financial year 20 to 23, when I picked up the financial statements for 20 to 23, when I looked at the notes to accounts, I'm able to find that in the notes to accounts, company told that they are having a contingent liability. In the notes to accounts, they have mentioned they have a contingent liability worth of 100 crore rupees, where it was presented in the financial year 20 to 23 financial statements. Now, for the next financial year, when I say 23-24, when I say opening balances, all the items which are there in the balance sheet, they become opening balances. Not just that, in the last year, whatever information that has been presented in the notes to account by way of disclosure, in the last year, that is in the financial year 22-23, in that financial statements, they have given some notes to accounts, they have given some disclosure that there is a contingent liability worth of 100 crores. Even this contingent liability also will form part of opening balances. So we have to change our perception. Whenever we say opening balances doesn't mean only those items from the balance sheet. It includes even those items which are given as a disclosure in the notes to accounts, like contingent liabilities, commitments, etc. See, out of this, they can pose a question, true or false statements they can pose here. They will say opening balances does not include matters which require disclosure that existed at the beginning of the period. Do you agree with that? No. Opening balances also include matters which require disclosure. The meaning of this sentence is, when I say opening balances, I'm not just referring to the amounts in the balance sheet. It also includes those disclosures which are given in notes to accounts also. Next one. Sir, what is the objective of this standard? So we have defined the three terms in our definition part. We have defined what is the initial audit engagement, what do you mean by predecessor auditor, what do you mean by opening balances. We have defined it. Now let us come to the next part. Sir, what is the objective of the auditor? Why this standard has been given? As per this standard, what auditor has to fulfill? Let us see. In conducting an initial audit engagement, the objective of the auditor with respect to opening balances is to obtain sufficient and appropriate audit evidence about whether opening balances contain a misstatement that materially affect the current period's financial statements. Whenever you are conducting initial audit engagement, especially as an auditor, you should try to obtain sufficient and appropriate audit evidence whether opening balances contain any material misstatement that could affect my current period's financial statements. Also, I should try to obtain appropriate audit evidence whether appropriate accounting policies reflected in the opening balances have been consistently applied in the current period's financial statements, or changes thereto are properly accounted for and adequately presented and disclosed in accordance with applicable financial reporting framework. So in the first point, they're asking you to obtain evidence regarding opening balances. In the second point, they're telling you two more things there. Two sub-points are there. Number one, we should try to obtain sufficient appropriate audit evidence that whatever accounting policies which are followed in the last year, the same accounting policies are consistently applied in the current year or not. So that's what they say. Appropriate accounting policies reflected in the opening balances. Whatever accounting policies reflected in the opening balances, whether those same accounting policies are consistently applied in the current year. Without any valid reason, they should not be changed. Or here they are told or, and they are giving one more sentence. No, this sentence they are giving when there is a valid change for, when there is a valid reason for change in accounting policy. Here from this part to this part. So let me put it this way. So here in the second statement itself, two substatements are there. Here till here, this is one statement. What is that? As an auditor, you should try to obtain audit evidence whether opening whatever accounting policies are there, without any valid reason, they should not be changed. They should be applied consistently. Then we have one more sentence which says changes thereto are properly accounted for and adequately presented and disclosed in accordance with applicable financial reporting framework. This when here they are impliedly trying to say that if the management has changed accounting policy, if there is a valid reason for that change, then they changed accounting policy, but there is a valid justification for that. In that case, I need to obtain audit evidence whether that change has been properly presented and disclosed in the financial statements. So two things, guys. Without you need to obtain audit evidence. Without any valid reason, accounting policy should not be changed. If at all there is a valid reason for changing accounting policy, then it should be properly presented or disclosed as per respective accounting standards. That's it. So you need to obtain evidence. So this is what the objective. Number one, try to obtain evidence regarding opening balances. Number two, try to obtain evidence regarding accounting policies. Clear? So these are the two objectives of the auditor. Now let us come to point number C. Sir, you are telling as an auditor, I need to obtain sufficient and appropriate audit evidence. But I will get evidence only when I perform audit procedures. Sir, what audit procedures I have to perform to obtain audit evidence whether opening balances contain a misstatement or opening balances do not contain a misstatement? You are asking me to obtain audit evidence. Agreed. You are telling as an auditor, try to obtain audit evidence whether opening balances contain a misstatement or not. But I will get audit evidence only by performing audit procedures. Sir, what audit procedures I have to perform to obtain audit evidence regarding opening balances? You need not look anywhere. They are mentioning in the same standard what audit procedures you have to follow to know whether opening balances contain a material misstatement or not. Let us see what they say here. The auditor shall read the most recent financial statements, if any, and the predecessor auditors report thereon, if any, for information related to opening balances, including disclosure. Number one, sir, what I can do to obtain audit evidence regarding opening balances? Whatever most recent financial statements are there, take that copy, read that financial statements. Whatever most recent audit report is there, take that audit report, read that audit report. Number two, the auditor shall obtain sufficient and appropriate audit evidence about whether opening balances contain misstatements that materially affect current period's financial statements by performing the following procedures. Once you have read last year's financial statements, once you have read last year's auditor's report, now you should perform some more procedures to obtain audit evidence whether opening balances contain a misstatement. How, sir? By following which procedures? By following the below mentioned procedures. What are they? Determining whether prior period's closing balance have been correctly brought forward to the current year, or where appropriate, any adjustments have been disclosed as prior period items in the current year's statement of P&L. Prior period items. So first point, what they're asking you to do is, number one, you need to check whatever last year's closing balances are there, they are correctly brought forward in the current year's financial statements. If at all, in the current year, if you find some error which belongs to the last year, if any prior period item you identified in the current year, how you should present it as per accounting standards? You need to show it as separate line item, prior period items in the statement of P&L. Even in Schedule 3 format also you'll be able to find. So whatever prior period items are there, if you find any previous year's related matters in the current year, that should not be added with the regular items. That should be shown as a separate line item in the statement of P&L as a prior period items. So that is what first thing they are asking you to check. Check whether last year's closing balances are correctly brought forward in the current year. And if at all, if you find any errors in the current year, display them as a prior period item, separate line item, you have to add it in the statement of P&L. B. Determine whether opening balances reflect application of appropriate accounting policies. Along with that, when you are checking the opening balances, you will also get to know what accounting policies are followed. Determine whatever accounting policies that are reflected in the opening balances, are they appropriate? Take for example, I'm verifying opening balances. While I'm verifying opening balances, I came to know that client has followed SLM method of depreciation. Client has followed which method? SLM method of depreciation. When SLM method of depreciation will be appropriate? SLM method of depreciation will be appropriate when the expected pattern of usage of machinery is uniform throughout its useful life. When you are expected to use the asset uniformly throughout its useful life, then SLM method will be appropriate. Some machineries will be of such a nature that year after year they get damaged, their usage will get reduced. There you have to follow WDV method. So if you came to know that the client has followed SLM method of depreciation, determine whether it is appropriate or not. How you will determine? By knowing about consumption pattern. If I came to know that yes, this machinery is expected to be used uniformly, then whatever SLM method the management has followed, that is appropriate. But I came to know that whatever machinery the company has purchased, its useful life will get reduced year after year. Then whatever SLM method they have followed, that is inappropriate. So like this, while obtaining audit evidence regarding opening balances, anyhow you will come to know about accounting policies. Check whether those accounting policies are appropriate or not. Next one. Perform one or more of the following. So in addition to that, they're asking you to perform few more procedures. What are they? Whether prior year's financial statements were audited, pursuing getting the copies of the audited financial statements, including other relevant documents relating to prior period financial statements. If last year financial statements are audited, go to the management, ask them, sir, please give me all the last year's financial statements, notes and all related information. Then evaluating whether audit procedures performed in the current year provide evidence related to opening balances. Sometimes you will perform audit procedures for the current year, but that audit procedures will give you audit evidence relating to opening balances. How come, sir? Let me give you one scenario. Assume that you are verifying financial year 22-23. Okay, so you are conducting audit for this year. While conducting audit for this year, you came to know that on 5th of April 2022, some debtor has gone bankrupt. On 5th of April, some debtor has gone bankrupt. See, from the last year's balance sheet date, within 5 days a debtor has gone bankrupt. That means as on the last year's balance sheet date, there should have been some provision existing. Yes or no? So in the current year, on 5th of April, some debtor has gone bankrupt. If one debtor has gone bankrupt on 5th of April itself, there should be some provision which should be existing as on 31st of March. Last year balance sheet, there should be some provision. That means there should be some opening balance of provision in the current year. So like this, when you perform audit procedures for the current year's financial statements, sometimes you might get evidence regarding opening balances. Try to become alert to it. So when you are performing audit procedures for the current year, sometimes you might get evidence regarding opening balances. Try to become cautious if you come across any such evidences while performing the current year's audit procedures. Next one. Perform specific audit procedures to obtain audit evidence regarding opening balances, and even you try to perform specific procedures. Like what specific procedures? Take the last year's audited financial statements, take the opening trial balance, and try to match both. This is what I have explained while explaining the concept. Perform these kind of specific audit procedures also. Guys, what do they say here? Come on, let us revise. Most important paragraph. Most of the times they have asked this question in the examination. So how they will ask you the question is, as an auditor, you are conducting audit of a so and so entity. What audit procedure? What are your responsibilities regarding audit procedures regarding opening balances? Or they might ask you what audit procedures you try to perform regarding opening balances, or what you are expected to do regarding opening balances. So like this, they might ask you a question, and even they have asked it so many times. So if you find any question relating to audit procedures which you will perform regarding opening balances, what we will write? Come on, let us revise it. Summary. Number one, read the latest, whatever most recent financial statements, whatever most recent audit report is there, read it once. Number two, you need to obtain sufficient appropriate audit evidence that opening balances do not contain material misstatement by performing some procedures. What are they? Number one, check whether last year's closing balances are correctly brought forward in the current year. If at all any adjustments are there, they should be shown as prior period items in the current year. Number two, whatever accounting policies that are reflected in the opening balances, check whether they are appropriate or not. Then you need to perform one or more of the following procedures. Like what? Number one, get the last year's audited financial statements and all other relevant information. Remain alert whether audit procedures performed for current year give you evidence relating to opening balances. Number three, perform specific audit procedures like comparing the last year's audited financial statements with the opening trial balance. So this is how you need to prepare a summary. At the time when you are reading for the subjects, at the time when you are reading for the first time, you need to prepare a summary like this. When you prepare a summary like this, what will happen is revision, you can complete it in a fraction of minutes, fraction of seconds. Able to understand? Come on, once again I am revising. Why I am revising these many times is it is important from the examination perspective. If they ask you the question, what audit procedures auditor will perform regarding opening balances? Number one, read the most recent financial statements and audit report. Then you perform some procedures to know whether opening balances contain a misstatement. What are they? Number one, you have to check whether last year's last year's closing balances are correctly brought forward. If at all any adjustments are there, show it as prior period items. Number three, check whether whatever accounting policies are reflected, whether they are appropriate or not. Then you perform one or more of the following. What are they? Three things they say there. Number one, get the copies of last year's audited financial statements. Remain alert whether audit procedures performed in the current year provide evidence regarding opening balances. Number three, perform specific audit procedures like comparing the opening trial balance with the last year's audited financial statements. Understood? Next. So now what we will do is, D point, we'll talk about it later. Sir, how my opinion will be impacted because of opening balances? I have already told you, when you have obtained audit evidence that opening balances contain a misstatement, either give qualified or adverse opinion. When you are unable to obtain sufficient and appropriate audit evidence regarding opening balances, then you give either qualified or disclaimer of opinion. The same thing they try to say there. When you found that everything is correct, no need to modify. This is what I have told you even in the chart also, no? So here I have summarized in the chart. If you obtain that all the opening balances are correct, no need to modify. Unmodified we will give. If you have evidence and concluded that opening balances contain a material misstatement, then you modify your opinion either qualified or adverse. If you are unable to obtain sufficient and appropriate audit evidence whether opening balances contain a misstatement or not, then also give the modified opinion either qualified or a disclaimer. The same thing they try to explain there. Let us read it. If the auditor concludes that the opening balances, concludes means what? Auditor is clear. Auditor concludes means he is having sufficient and appropriate audit evidence. That is what the meaning of concludes. When we will conclude here, when we will form a conclusion, when we have evidence we will conclude, or when we don't have evidence we will conclude. When we have evidence, then we conclude. So if the auditor concludes that, that means he's having a evidence that opening balances contain a misstatement that materially affects the current period financial statements, and the effect is not properly accounted for or disclosed in the financial statements. In that case, the auditor shall express either qualified opinion or an adverse opinion as appropriate. That's what even I have also told. So what did I say? If you have evidence and you came to know opening balances contain a misstatement, then you have to give either qualified or adverse. One more case. If the auditor is unable to obtain sufficient and appropriate audit evidence, if you are unable to obtain audit evidence only regarding opening balances, then auditor shall give either qualified opinion or disclaimer of opinion depending on materiality and pervasiveness. Clear? So what we have seen in this standard till now, definitions we have seen, objectives of the auditor we have seen, what audit procedures auditor will perform regarding opening balances we have seen, how findings regarding opening balances will impact the auditor's opinion, that also we have seen. Now let us see what auditor should do regarding accounting policies. This I have already told you. The auditor should obtain sufficient and appropriate audit evidence about whether the accounting policies reflected in the opening balances have been consistently applied in the current period financial statements. So if there is no valid reason, accounting policy should not be changed. So consistently accounting policies are applied or not. If there is, let me write it here in the bracket also. There is no valid reason for change in accounting policy. If there is no valid reason for change in accounting policy, then I need to obtain audit evidence that they are consistently applied. No accounting policy has been changed. And whether changes in the accounting policies have been properly accounted for and adequately presented and disclosed in the financial statements in accordance with applicable financial reporting framework. This when there is a valid reason. There is a valid reason for change in accounting policy. See, management has changed a accounting policy, but for that change, there is a valid reason. If there is a valid reason for change in accounting policy, then I need to obtain audit evidence whether that change has been properly presented and disclosed in the financial statements. So two things, guys. Once again, I am repeating. Without any valid reason, accounting policy should not be changed. That I need to obtain audit evidence. That is addressed in this A point. If at all there is a valid reason for change in accounting policy, then I need to obtain audit evidence that the change has been properly presented or disclosed in the financial statements. Clear? Able to understand? Good. Now, sir, how auditors' findings will have impact regarding accounting policies? I have already told you, if the auditor concludes means what? If the auditor is having sufficient and appropriate audit evidence that the current period's accounting policies are not consistently applied in relation to opening balances. That means accounting policies are changed. Without valid reason, accounting policies are changed. Without any valid reason, accounting policies have been changed. Consistency is violated. Management changed accounting policy, but there is no valid reason. What I will do? I will modify my opinion. Which modification? Either qualified or adverse. Or a change in accounting policy is not properly accounted for or not disclosed presently or not adequately presented or disclosed in accordance with applicable financial reporting framework. This when there is a valid reason. Because of valid reason, client has changed accounting policy. But what is the mistake client has committed? They did not properly show it in the financial statements. They did not properly give a presentation and disclosure. Then also we will give either qualified or adverse. Understood? Two cases, guys. Without any valid reason, management changed accounting policy. There is a valid reason for change in accounting policy, but management did not properly present or disclose it. In either of these cases, auditor will give qualified or adverse. Can the auditor say he is unable to obtain audit evidence regarding accounting policies? No, he cannot say. Why? Because we are a accounting professionals. If you say that, we don't deserve to be chartered accountants. This I have already explained. Hope everybody is clear. Now we have one more last point from this standard. Let us try to cover that also. Modifications to the opinion in the predecessor's auditor's report. Sir, what is this? Simple point only. In 2 minutes we can complete. So what they say here is, assume that you are appointed as auditor of some company for the financial year. Let me put it this way. You have been appointed as auditor of the company for the financial year 22-23. This is the current financial year and you are the person doing audit for this company for the current year. Last year, previous year will be 21-22. In the previous year, some other person has done the audit. Last year, Mr. A has done the audit. In the current year, Mr. B was replaced. Now, in the last year's audit report, last year there will be audit report, no? When I see the last year's audit report, the last year auditor has given a modified opinion. last year auditor has given what? Modified opinion. When I say modified opinion, it could be qualified, adverse, disclaimer, whatever it is. So last year's auditor, when he gave the audit report on the previous year's financial statements, in the audit report there is a modified opinion, either qualified, adverse or disclaimer. Now, do you think is the current year auditor under an obligation to compulsorily give modified opinion for the current year also? Just because the last year's auditor has given a modified opinion, is there an obligation on current year auditor also to compulsorily give modified opinion in the current year? No, never. See, if that is the case, no. If standard tells if last year auditor gave modified opinion, current year auditor also must give modified opinion, then what will happen is, once the company gets a modified opinion, never in its life it will get back a modified opinion. The standard did not say it. The standard never says if the last year auditor has given a modified opinion, current year auditor also must give modified opinion. The standard did not say. What the standard says is, last year auditor gave modified opinion. There will be some reason because of which last year auditor gave modified opinion. If that reason is unresolved in the current year, because of whatever issue last year auditor gave modified opinion, that reason is unresolved, that reason is not rectified, that reason is material even for the current year also, then only current year auditor will modify. If because of whatever reason the last year's auditor gave modified opinion, if that reason remains relevant, unresolved, material for the current year, then also current year auditor will give modified opinion. In remaining cases means what? Because of some reason last year auditor gave modified opinion, either that issue has been resolved in the current year or that issue is no longer material in the current year, then there is no obligation on the current year auditor to compulsorily give a modified opinion. That's all, guys. For that also they have given one separate paragraph. Able to understand? So if I read it once, if the predecessor auditor's opinion regarding the prior period financial statements included a modification, that means if the last year's auditor's report contain a modification, if that remains relevant and material to the current period financial statements, that means if because of whatever reason last year auditor gave modified opinion, if that is relevant, that means if that is not rectified in the current year and if it remains material for the current year, then the current year auditor also shall modify current year's auditor's report. Which impliedly means that if predecessor auditor gave a modified opinion, if that reason is no longer relevant for the current year, no longer material for the current year auditor is under no obligation to compulsorily give a modified opinion. Hope you are able to understand. So summary is what? If the last year's auditor gave modified opinion, if that reason remains relevant even for the current year also, then only current year auditor will modify. If last year auditor gave modified opinion, if that reason is no longer relevant, no longer material for the current year, then there is no obligation on the current year auditor to compulsorily modify his opinion. Set. Over. So now let us have a look at test your knowledge questions. Guys, the standard is over. Now we have to see how the questions may be tested in the examination. Shall we do it? So first of all, before that, what and all we have understood in the standard? We have understood definitions. We have understood what is the objective of the standard, what audit procedures auditor will perform regarding opening balances, what impact the findings will have on the auditor's report regarding opening balances, what auditor will do regarding closing balance, accounting policies, how that will have an impact on the auditor's opinion. Finally, what if there is a modification in the previous auditor's report? That's all. So let us have a look at test your knowledge questions. To become familiar how the questions may be tested in the examination, let us have a look at test your knowledge questions. The newly appointed auditor of BTN Limited wants to obtain sufficient appropriate audit evidence about whether opening balances contain misstatement that materially affect the current period financial statements. What audit procedures should be performed? As an auditor, you want to know whether opening balances contain a misstatement or not. What procedures you will perform? We have read a dedicated paragraph for that. What audit procedures auditor will perform regarding opening balances? This paragraph you are supposed to write there. Next one. Pankaj Associates Chartered Accountants have been appointed as auditor of ABC Limited. CA Pankaj did not apply any audit procedures regarding opening balances. He argued that since financial statements were audited by the predecessor auditor, therefore he is not required to verify them. Is CA Pankaj correct in his approach? See, they are saying that in the question they have clearly told last year's financial statements were audited by predecessor auditor. In the current year, the auditor was Pankaj and Associates. Now you tell me, will it be initial audit engagement or recurring engagement? It is a initial audit engagement. Why? Because last year it was audited by somebody else. Now he is telling that since last year was audited by somebody else, I don't have any obligation to check opening balances. Is this person correct in his approach? No. Why no? Why? Because SA 510 clearly says in the objective paragraph, in the case of initial audit engagement, the current year auditor should obtain audit evidence regarding opening balances. So in the given case, the audit is an initial audit engagement, and in the case of initial audit engagement, SA 510 will become applicable, and the objective paragraph of SA 510 clearly says that the current year auditor should obtain audit evidence regarding opening balances. So how you will present the answer is, first write the definition of initial audit engagement, then write the objective of SA 510. Then give the conclusion, in the given case, CA Pankaj shall obtain sufficient and appropriate audit evidence regarding opening balances. Why? Because this is a initial audit engagement. That also you can add. This is how you have to present the answer. Next question. PQR and Associates are the statutory auditors of TUV Limited for the financial year 2020-21. They have been appointed as statutory auditors of TUV Limited for the first time. First time means what audit it is? Initial audit engagement. What is the objective of the engagement partner in accordance with SA 510? Straightforward question. They are asking you what are the objectives of the auditor as per SA 510. Just write the objectives paragraph. Next one. Auditors of Govardhan India Private Limited were changed for the accounting year 2020-21. Changed means last year somebody else is there, current year someone else was appointed. What audit it is? Initial audit engagement. Next. The closing inventory of the company as on 31st of March 2020. Last year's closing balance. Audit is happening for 2021. They are telling the closing balance of inventory as on the last year's balance sheet date, which means the opening balance of the inventory is 100 lakh rupees. Continued as it is, and it even became closing inventory as on 31st of March also. So what they are trying to say here is, I am getting appointed as auditor of 2021. What is the last year's balance sheet date? 31st of March 2020. In the last year's balance sheet date, the inventory was 100 lakh rupees. The same inventory continued as it is, and it became closing stock of the current year also. In the current year also, inventory is 100 lakh rupees. And this 100 lakhs of inventory continued as it is from last year's balance sheet date. Next one. Next, what they are saying. The auditors of the company propose to exclude from their audit program the audit of closing inventory of 100 lakh rupees on the understanding that it pertains to the preceding year, which was audited by another auditor. Now, what the current year auditor says is, I will not verify this inventory. Why he is saying he will not verify inventory? What argument he is putting is, since this inventory continued from the last year, this inventory was there in the last year's balance sheet only. So it is already verified by the last year auditor. So that's why I will not verify it in the current year. That's what he's saying. Tell me, is the current year's auditor's intention correct? So what is the useless argument which the current year auditor is putting? He's saying, this inventory I will not verify. I will exclude this inventory from my audit. Why? He says that this inventory continued as it is from the last year. That means it formed part of the last year's balance sheet, which is already done by last year's auditor. So that's why I will not verify inventory in the current year. That's what he's saying. Is he correct? No. The inventory should compulsorily form part of his audit. Just if you write this line, you will not get full marks. You need to write explanation, justification you have to give. Then only you will get that 4 marks or 3 marks, whatever it is. You will get justification only when you write the apt reason. If you just add one line, in the given case the argument is incorrect, he has to verify balances, that will not be suffice. Now, how to present the answer, sir? How to present the answer is, in the given case, it is clear that it is an initial audit engagement. If it is an initial audit engagement, SA 510 will become applicable. Now, last year's closing balance will become current year's opening balance. And SA 510 says, in the case of initial audit engagement, you need to obtain audit evidence regarding opening balances. So first, what here also we will do, we will write objectives of SA 510. Here also we can write definition of initial audit engagement. Then we can write objectives of SA 510. So as per SA 510, this is initial audit engagement. This 100 lakhs will form part of current year's opening balance. You need to obtain audit evidence as per SA 510. Even if you ignore SA 510, even if you talk about general principles of the audit. See, you are telling this inventory is continuing from the last year. See, whether it is continuing from the last year or is it continuing from the last 100 years, doesn't matter. It is forming part of current year's balance sheet now. When it is forming part of current year's balance sheet, you are giving audit report on current year's balance sheet only. So this inventory might be continuing from last 100 years, but it is forming part of your current year's financial statements. No. Can you sign the audit report without verifying an item of financial statements? No. So even if you go by SA 510, as per SA 510, there is an obligation. Even if you ignore SA 510 also, even if you go by general principles of the audit also, this 100 lakhs of inventory is forming part of current year's balance sheet. You can't assign the audit report by excluding this inventory of 100 lakh rupees from your verification. So all this justification we can write here. The same thing I have presented in the answer here. So first write objectives of SA 510. Then you write about general principles. What are they? General principles governing verification of asset. Required that auditor should confirm that assets have been correctly valued. As an auditor, even if you go by general principles, you should make sure that all the assets shown in the balance sheet are correctly valued. The contention of the management that inventory has not undergone any change cannot be accepted. It forms part of normal duties of the auditor to ensure that figures on which he is expressing opinion are correct and properly valued. One more information also they say here. Moreover, it is quite likely that inventory line might have been deteriorated, damaged, and the same need to be examined. See, if the inventory is continuing from the last year as it is, there could be a possibility of damage happening. When there is a damage to the inventory happening, it could have lost its value. Its NRV will get reduced. So don't you think it is necessary for the auditor to verify it? Yes. Why? Because since the inventory is continuing as it is from the last year, there is a possibility of deterioration of the inventory. So definitely auditor should verify it. Therefore, auditor is advised not to exclude the audit of closing inventory from his audit program. So better auditor should not ignore it, he should include it. So this way you have to write the answer. Next one. Mr. Tom, a practicing chartered accountant, has been appointed as an auditor of Cruise Limited. Mr. Tom performed audit procedures to obtain sufficient and appropriate audit evidence regarding opening balances. Advise what are the reporting requirements of the auditor regarding the findings of opening balances. Now they are not asking you about audit procedures, they are asking you about how it will have an impact on the auditor's reporting. So this you have to write audit conclusions and reporting. This paragraph you are supposed to write here. Understood. So this is what regarding SA 510. With this we are all successfully done with SA 510. So thank you so much guys. Thanks for your patience listening. Stay tuned for more videos. Thank you so much. Bye everybody. Take care.